Understanding 401k withdrawal penalties. Have you ever thought about dipping into your 401k before you hit retirement age? It's tempting, especially when unexpected expenses pop up, but it can be a costly move if you're not fully aware of the penalties involved. So let's first discuss the types of penalties you would normally incur for early withdrawal. 1. Early withdrawal penalty. Generally, if you take money out of your 401k before you turn 59 and a half, you'll get hit with a 10% early withdrawal penalty. That's right, 10% of your money gone, just like that. This penalty is designed to discourage people from tapping into their retirement funds prematurely. For example, if you take $10,000 out, you would incur a $1,000 early withdrawal penalty. 2. Federal withholding and state income tax penalties. When you withdraw funds from your 401k early, taxes are withheld at a flat rate of 20% for federal income tax. This withholding is mandatory and serves as an advance payment towards your total tax liability. In addition to the federal withholding, you might also face state income tax withholding, which varies by state. Moreover, the amount you withdraw is added to your annual taxable income, potentially pushing you into a higher tax bracket. But wait, there's more. Besides the 10% early withdrawal penalty and 20% withholding tax penalty, you also have to pay income taxes on the amount you withdraw. The money in your 401k hasn't been taxed yet, so when you take it out, it's treated as taxable income during each year you take a withdrawal. Depending on your tax bracket, this can significantly increase your federal income tax bill for the year. For instance, if you're in the 24% tax bracket and you withdraw $10,000, you'll owe $2,400 in taxes on top of the $1,000 early withdrawal penalty and the $2,000 withholding tax. That's a total of $5,400 gone from your $10,000 withdrawal, over half of your money. And don't forget that you may owe state income taxes on that withdrawal amount also. Strategies to avoid penalties. Now, let's get to the good news. There are ways to access your 401k funds without incurring these hefty penalties. Here are strategies you can consider. 1. Hardship withdrawals. One option is a 401k hardship withdrawal. This is allowed if you have an immediate and heavy financial need, such as medical expenses, buying your primary home, or preventing eviction or foreclosure. We'll discuss these and other types of hardships later on in this video. Please note that not all plans offer hardship withdrawals, and the rules can be strict. Plus, you'll still owe income taxes on the amount you withdraw, even if you avoid the 10% early withdrawal penalty. Please refer back to the previous section on tax penalties in this video if you want a refresher. 2. Substantially equal periodic payments, also known as a SEP. Another method is setting up substantially equal periodic payments. This allows you to withdraw money without penalties by committing to a series of regular withdrawals based on your life expectancy. You must stick to the plan for at least 5 years or until you turn 59 and a half, whichever is longer. While this option avoids the penalty, it requires careful planning and commitment. 3. Leaving your job. If you leave your job at age 55 or older, or age 50, for certain public safety employees like police officers, firefighters, emergency medical personnel, air traffic control, and border patrol, you may be exempt from the 10% early withdrawal penalty. This exception is known as the Rule of 55. It applies specifically to the 401k plan of your most recent employer and does not extend to IRAs or previous 401k plans. While this exemption helps avoid penalties, regular income taxes still apply to the withdrawn amounts. 4. Rolling over to an IRA. If you're changing jobs or retiring, you can avoid incurring an early withdrawal penalty by directly rolling over your 401k into an individual retirement account, also known as an IRA. An IRA can offer more flexibility and sometimes lower fees. Importantly, if you need to withdraw funds, IRAs have slightly different rules and might offer additional penalty-free withdrawal options. However, like a 401k, you'll still face taxes and potential penalties if you don't follow the rules. Please consult a financial advisor if you are considering this method or any other circumstance where you are considering accessing your 401k funds early. In addition to the methods previously mentioned, there are several other ways to make a penalty-free 401k hardship withdrawal. 5. Medical expenses. If your non-reimbursed medical expenses exceed 7.5% of your adjusted gross income, you can make a penalty-free 401k hardship withdrawal to cover these costs. 6. Disability. Withdrawals are penalty-free if you become permanently disabled and can no longer work. 7. Disaster relief. When a federally declared disaster strikes, the IRS may allow a penalty-free 401k hardship withdrawal. The exemption typically applies only to specific disaster areas designated by federal authorities, and the withdrawal amount is still subject to income taxes, so it is essential to check the specific IRS guidelines for each situation. 8. Qualified Domestic Relations Order, also known as a QDRO. If a court orders a distribution to your spouse, child, or other dependent as part of a divorce settlement, those withdrawals are penalty-free. 9. Higher education expenses. Penalty-free withdrawals can be used to pay for qualified higher education expenses for yourself, your spouse, or your dependents. Eligible expenses include tuition, fees, books, supplies, and equipment required for enrollment or attendance at an eligible educational institution. Additionally, room and board costs may qualify if the student is enrolled at least half-time. 10. First-time home purchase. While not applicable to 401k plans, it's worth noting that IRAs allow penalty-free withdrawals up to $10,000 for first-time home purchases. So if you roll your 401k into an IRA, you can take advantage of this benefit. 11. Active duty military. If you are a reservist called to active duty for at least 180 days, you can make penalty-free withdrawals during your active duty period. 12. Birth or adoption. Recent legislation allows for penalty-free withdrawals up to $5,000 for expenses related to the birth or adoption of a child. 13. Eviction or foreclosure. Penalty-free early 401k withdrawals can be used to prevent eviction from your home or foreclosure on your primary residence. Remember to always consult a financial advisor to ensure you are making the best decisions for your specific circumstances. Happy living.